Well, hello, everybody, again. Thank you so much for tuning in with Dollars with Decker right here on AM 590. I really focus with you guys, and as I've gone ahead over the last couple of weeks, is really trying to prepare you guys for the major revolution that's obviously taking place in the entire country as we make the decision of, are we going to be moving to a new monetary system, and really kind of understanding the basics of crypto, basics of kind of what are we going to do with the craziness that we're seeing as the devaluing of the US dollar, as well as all these other fiat currencies across the country, in lieu of stemming from the, obviously, COVID pandemic that basically came across. And so as I've walked you guys through in the previous couple weeks, kind of understanding what cryptocurrencies are, the different categories of cryptocurrencies, and kind of some of that exposure, we're going to be kind of changing our tune a little bit this week and focusing on something that has really just happened. As you guys may or may not know, we had a major Federal Reserve meeting with Jerome Powell that came to an end on Wednesday. And this was on the heels of inflation numbers that had come out last week that shocked the world. And so many of you guys that don't really care or understand what inflation is you really do need to. So what inflation is there's two types of inflation that is measured. There's inflation that is measuring on the goods, the raw materials that are coming in to make consumer products. And then there's the inflation that consumers experience on buying these goods and services. And if you haven't learned yet, you need to realize that what the U.S. and Fed released to us is most of the time a complete lie, and these numbers have been greatly manipulated. And one of the things as I kind of really wanted to prepare as I try to educate you guys on everything that high school and college didn't teach you guys is I want to dive into the data. And it's crazy to believe, but did you know that the CPI inflation numbers, meaning the consumer goods and services inflation numbers, have been manipulated so many times over the last 40 years that if we actually use the same inflation readings that we did when it started, that inflation would be reading at about 13% per year. But obviously, they can't come out to the press and say that. So what do? They manipulate the goods and services baskets, what they include in these inflation numbers, to make it as favorable as possible so that Jerome Powell can come out and say these things are transitory. What do I mean by that? What I mean is let's say in 1 month they're going to compare the rise in price of apples, and apples went up 4% year over year. And now the next month they come in and they say, hey, you know what? Instead of apples, let's put bananas in there. And so wait, because bananas only went up 5%, and now apples are up 7%. So let's swap those out. What also is crazy, it's not included in the inflation numbers. I think it's everybody tuning in knows. If I was going to sit down with every one of you guys and say, what are the two most expensive things that you deal with on a monthly basis? You're going to tell me, well, my rent or my mortgage payment, and two, my automobile, my fuel costs of traveling. And did you know that neither one of these are included in the CPI numbers? So when you hear these inflation numbers coming out of 5% per year inflation, which was the highest reading that we had seen since 1992, and truly, it's probably the highest real number we've ever seen since they've been measuring it. Well, guess what? House prices going up and fuel prices going up, those aren't important. We don't want to, because those will mess up the numbers. So why don't we just throw those out and let's use things that really we don't care about, and we'll put those in there so our CPI inflation numbers look really low. Well, that's exactly what the Federal Reserve does. And so if we actually included the real inflation numbers, if we included the cost of housing and the cost of fuel in those inflation numbers, depending on who you talk to, you're going to see between a 10 and 13% reading year over year, meaning things are 10 to 13% more expensive for the average American than they were 1 year ago. Now, why is this so important for you to understand? It's so important for you to understand because guess what that means? For you to maintain the same lifestyle and the same cost of living that you did 1 year ago, you need a 10 to 13% raise every single year. And I bet you every single person on this, live stream, as on this show that's listening right now, did not get a 10 to 13% increase in their pay, especially over last year. And now what that also means is all the money that is sitting in your bank account, if you are not earning at least 10 to 13% interest on that money per year, you are losing money. What is that? Why? Because guess what? If I'm going to take $1, let's say a year ago, and I'm going to go to the grocery store, and I'm going to take that dollar and I'm going to go up to the counter, and it says a can of Coca-Cola is exactly $1. So I'm like, sweet, cool. Here's my dollar. I get my can of Coke. Let's say I go into that store a year from now, and I go in and I go to pay it, and it's $1.12 for a can of Coke. I'm like, shoot, that really stinks. Okay, here's 12 cents, $1.12. Now, a lot of people just think like, oh, okay, well, that's just the way things are. Things are going up. And that's the way they view things with houses, right? House prices have gone up 12, 13%. Well, that's just okay. House prices are going up because of supply. But when you actually take it and you put it on consumer goods, a stupid can of Coke did not raise in value 12 to 13%. No. The value of my dollar is losing its value. Therefore, a can of Coke costs me more dollars to get the same value of an item. And so that's what you have to understand. So if my bank account did not go up 12 to 13% in interest for the money sitting in there, I have to then spend more money in my bank account to buy the same goods. So if you're not earning 12 to 13% on your money, you in essence are dwindling away at your savings. You are working your tails off to put money in the bank at a rate, and then that money is losing value. You are negatively savings every single year. And so that is the scary part of inflation. And so how do you do this? And why am I talking about this? And it's just the way things are, Brian. Things just get more expensive. No, that's not the way things are. That's the way that the government has always told you. And here in the U.S., that's the way things, they just say, oh, well, cost of living goes up. And you know what, real inflation, is only like 3 to 4% to kind of like go ahead and suffice us. Well, we're finally now with the age of information and technology. 30 years ago, that worked because everybody got their news from the news, right? Tune into ABC, NBC, CNBC, and whatever they told you, we believed is truth. And what we did know, if it doesn't matter what side politically you're on, you very well saw during the last political elections in the last couple of years that the news is nothing more than a propaganda for either one side or the other. So now what we can do is we can actually, through the internet, we can actually go and actually get true, real information and see real numbers and actually talk to other individuals through the power of communication and realize that what we're being told is actually not the actual truth and we need to do something about it. So why am I talking about this? And what does this possibly have to do with cryptocurrency? Well, I'm going to tell you what. Because in the world today, we live in a world where it's called centralized finance, right? What we do is we make money at our jobs. We take that money and we go and we put it into a bank account. Our bank account then, Bank of America, Wells Fargo, Chase, they take our money there. They pay us this nominal little interest rate of 0.1% on our money. And we're like, okay, well, at least it's earning something. And then what do? They go to the Federal Reserve, they go ahead and they have to maintain a certain deposit ratio. They take that money that we are keeping on deposit, which is not their money. They go to the Federal Reserve and they basically lever it up, depending on the ratio they're going to do, as much as 10, 12 times that. So for every dollar that we are keeping in that bank account, Chase gets to go and have $12 to go ahead and play with and invest. And what do? They invest in going out and lending out credit cards. They invest in investment banking. They make personal loans. They use all that money out there. And then what do? They make 6, 10, 12, 15% on that money. They give us 0.1% of our dollar. And the lever that they made, they get to keep all that interest. And that's how banks make a lot of money, right? And so that is being centralized. And that's how Chase right now, if you've seen, is Chase is sitting on $500 billion in cash. Jamie Dimon said he came out and that he is holding a massive cash position to see how the inflationary trade plays out to figure out what he's going to do. Paul Tudor Jones, one of the greatest hedge fund managers of all times, said exactly that. I'm going to see what Jerome Powell says to determine what I'm going to do with my billions and billions of dollars and where I'm going to put it. Because right now, if this inflation starts running wild, you know what? Gold and crypto look really good. But Brian, when Jerome Powell came out and he mentioned inflation, gold sold off, Bitcoin sold off, and the dollar went up. Why did that happen? It's because the initial knee-jerk reaction to something is when people are very uncertain about the market, they move to cash position. It's just what they do. They don't know where things are going, and they move to a cash position. And that's what ends up happening initially. And many times what is called the DXY, or the dollar index, moves up. When you think that the dollar should be falling in value with inflation, many times this dollar index rises up initially, and that's what is currently happening. So how do we take the power away from banks utilizing our hard-earned money, paying us nothing for interest on it, making billions and billions of dollars on our money that we have no say in what they're doing with it, and then when they lose all their money like they did in the financial crisis and make a really bad decision, then the government comes in and bails them out and they win again? Well, the only way you can do that is to remove their power, or basically move from a centralized finance world where basically the money that we have, we give to them in their custody, and they get to do with what they want with it to a certain extent, as long as they maintain a certain level of reserves. We have to pull that away from them. Here I introduce the world of DeFi to you. So you have CFI, which is centralized finance, and then you have DeFi, which is the world of decentralized finance. Well, what is DeFi? And if you guys are just tuning in to me, what I had wanted to go ahead and paint it is I want to let you guys know that the canvas that is being laid out right now for us around the world, there was never really a need for decentralized finance or cryptocurrencies or many of these things until really COVID kind of opened everything up, and we watched the entire, pretty much every major country in the world go to the printing presses, print billions and trillions of dollars. And to give you an idea, I mean, think about this. If you took the entire currency, the entire money in the world, and we all put it together for all of time that is in existence, every dollar bill, every euro, everything in existence, and we went and we put it all and plopped it in one gigantic pool. And we looked at that pool and we said, wow, that's a lot of money. And we said, well, but this has been going on for hundreds of years or whatever. This is okay. Now imagine if I told you and you looked at that pool and I said, hey, you see all that money in that pool? Well, 25% of that money in the pool didn't exist 18 months ago. That the entire money supply system in the world grew by 25% in 18 months since COVID. Okay? 25%. That means one out of every $4 in the world exists now, and that was printed with no basis behind it just due to stimulus because of what we did. So this has made people very, 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 very mad that the money they're working so hard for is just being printed, devalued, and we're paying nothing in terms of interest on it. And so now enter in smart contracts and blockchain technology. And what smart contracts are, it is simply programmable money. All it says is, hey, if this condition is met, and hey, if this condition is met, this exchange of digital assets or digital wealth or a transfer of wealth from one person to another can be done without any single middleman or intermediary saying yes. So I, as Brian Decker, can log on to a blockchain site, like let's say an Ethereum-based site like Aave, for an example, which is a peer-to-peer lending site, and I can say, hey, you know what? If Joe Schmo in Ireland wants to put up a half a Bitcoin, I, Brian Decker, have no problem lending him a quarter of Bitcoin in a stable coin like Tether, meaning, for example, if you don't know what a stable coin is, so you have a stable coin, and let's say you have Tether, for an example, which is the most common. What it is Tether, one Tether equals $1. So if this individual wants to put up a Bitcoin and say he wants cash really quick to go ahead and invest in his business, but he doesn't want to sell his Bitcoin because he doesn't want to lose its value or incur capital gains, he can put up half a Bitcoin, let's say if it's worth 20 grand today, for an example, and I can say, hey, I'm cool with making that. Hey, if he puts up half a Bitcoin, you can take out directly out of my wallet 10,000 Tether, give it to him, and then he has to pay me 6% interest on my money. Nobody has to approve him for that. Nobody has to do it. It's basically like a digital pawn shop, right? He can come in as a pawn shop. You go in and you get an over collateralized loan. You meaning say, hey, I'm going to put this item of value up and you're going to give me 50% of its value. And then if I default on it, you get to sell the item and pay yourself back and you make a bunch of money on it. That's why it's over collateralized. It's very, very low loan to value items. Well, that's basically what banks do, right? But they make all that interest and they don't pay it to us. Well, what DeFi does is it takes that away. It's permissionless peer-to-peer lending, borrowing, and all these different types of items. And so I can take my US dollars in my US bank account, convert them to Tether or another type of stablecoin. So it's not having the crazy volatile swings of Ethereum or Bitcoin or anything like that. I can take that. I can go ahead and lock it up securely on the blockchain, which is a public ledger where every single transaction is recorded publicly. There is an exact proof of ownership of that digital asset. And I can say, hey, if he puts this money up, and I will send money from my wallet to his wallet, and then he has to pay me 6% interest. And if he defaults on that, guess what? Or the value of his Bitcoin drops to a certain level, his Bitcoin is automatically liquidated. I get all my interest, all my money. There's nothing he can do about it to stop it. And I get to make 6% on my money, for an example. Well, this is where DeFi kinds, and that's just one example of DeFi. It's very safe, very secure. And it wasn't really, people really didn't talk about it. To give you guys an idea, just 2 years ago, there was about $300 million worth of money locked up in DeFi. And you guys would probably be shocked today to tell you that there is $55 billion locked up in DeFi right now. $55 billion locked up. So who's doing this? Well, who's doing this? There's many institutions. There's lots of wealthy individuals that they understand, if I'm losing all this value in my US money, why don't I convert it to a stable coin? And instead of banks making all the money, I'm going to take some ownership into my hand. And we're still in its infancy. And I know DeFi is the future. And so a very easy way for individuals that can kind of get a real grasp, if you're like, shoot, Brian, what do I do? Well, for an example, that basically what you can do is basically go ahead and utilize something that is like a company called Celsius or BlockFi. So what Celsius and BlockFi are, which is really, really cool, is let's say I have $100,000, for an example, just sitting in my banking account, my checking account. And I'm like, okay, this 0.1% interest I'm getting paid for Chase really stinks. But Brian, I don't want crypto. I don't want Ethereum. I don't want Bitcoin. That's a little too risky for me right now. What can I do with it? What you can do with it is you can take that money and you can set up something called Celsius, okay? Or BlockFi, and that's BLOCKFI or Celsius. You can just Celsius crypto application. You go in, and what you can do is you can say, okay, I'm going to set it up very much like you would set up a Venmo account or a PayPal account, and it verifies your identity and all these types of things. Both are, Celsius is a UK-based company, and BlockFi here is a US-based company. And I can then take $100,000 out of my Chase account. I can wire it over to my Celsius account, and it'll go over there as a US dollar. And then from that US dollar, what I can do is I say, hey, you know what? I'm going to go ahead and buy Tether, okay? I'm going to go, it's called, the ticker for it is USDT, and it just mimics $1. All it is a digital dollar. It's just like if you buy money and you put money in your Venmo account, or you have money in your bank account. It's not like you physically have those dollars. No, it's digital dollars. So this is a type of digital dollar where every single tether is backed by $1. And this has been verified. And what you can do is you can take that tether and you can convert it and just keep it in tether in a normal savings account. And Celsius will pay you 8% to 9% interest per year on your money. 8 to 9%, okay? 8 to 9% interest per year on your money. Or you can take your Bitcoin if you have it, or your Ethereum if you have it, and if you're hodling it, meaning you're keeping it long term, you can move it to your Celsius wallet and earn anywhere between 4 and 7%, and you get paid in it in whatever the lifetime is you want. So for an example, what that means is if I hold Bitcoin, I can get paid interest in Bitcoin or in Ethereum or in Tether or, in USDC, or if I have Matic or Polygon is what it's known, you can get 11%. So for those of you that are really fearful of the crypto space and you're like, I'm not ready for all that yet. Are you fearful of taking your US dollars and converting them to a US digital currency like Tether and then making 8% on your money, making 80 times the return that you're getting in your bank account with no more volatility, no more things? You are taking your assets back from the banks and you're putting it in your bank account and you are making money on it. Like, why are you giving it to Chase and Bank of America? Like, why are they getting to make billions and billions and billions of dollars a year? And then if they screw up and they buy bad loans, then the government and we through the taxpayers has to go ahead and cover that loss. No, DeFi takes that power away from them and puts it into our pockets and are allowing people to do it. And it can all be done through blockchain technology. And that's what I am excited about. So not only imagine in the future, if I want to go and get a mortgage, and through blockchain technology, I want to go on and get a mortgage, and I don't have to tell me if Chase is going to make a decision on my under. I'm going to go in and I'm going to say, hey, you know what? I want to get a mortgage. Here's the asset I want to do. And right on the blockchain technology, it's going to say, hey, you know what? Brian Decker, he has a 780 credit score. I can see that directly through there. He files his tax returns. I see that he deposits X, Y, and Z dollar amount in his bank account. He's shown that he's paid all of his utility bills on time. Instantaneously being able to make a decision on a loan that I can get. And the cost of borrowing is going to be less because guess what? There's no middleman. There's no intermediary. And that's where we're going. And that is where decentralized finance is actually coming in. And there's so many ways that people can do it. And for the lack of just confusing everybody, I wanted to talk about the simple thing about just the lending aspect. So how can Celsius pay this amount of money out? How can they possibly do that? Like, well, how can Celsius pay 8 or 9% out? I don't understand that. Well, here's what they do. They are doing something no different than what Chase Bank is doing, right? How can Chase Bank pay you 0.1%, right? What Chase Bank is doing is they're taking your money, They're levering that money. They're making investments with it by lending it out to individuals, right, who are paying interest on that money, high interest rates on that money, and then they're paying you 1/80th of what they're earning on it, for an example. Well, because in DeFi, there is no middleman, for an example, like on Aave, that's AAVE is the largest lending platform. Aave is decentralized. So instead of they making the bulk of the profits, the individual who is actually providing the asset, aka the person that's putting up the money or depositing the money onto that institution, is the one that's earning the interest, and rightfully so, right? That's what it's doing. And so by going ahead and moving money out of your US bank account and putting it into these types of applications like Aave or Compound or Celsius or BlockFi, you are securely taking US dollars, converting it to a digital dollar called Tether or a USDC coin. And then that USDC coin, that money that you are depositing on there, that particular DeFi project is in turn now lending it out to individuals who are coming to them and saying, hey, Celsius, here, I have $50,000 in Ethereum. I want to take a quick loan for $25,000 that I want to be able to go ahead and utilize it because I want to, put a quick down payment on a flip house I'm doing. So they go ahead, they put that down, and Celsius goes ahead and says, hey, okay, cool. Here's your loan. It's a 6-month loan that we're going to make you, and you're going to pay 11% interest on this money. And they say, okay, cool, perfect. I don't need any credit check. Perfect. Here's the money. And guess what? All those payments that individual who's receiving that money is paying in interest. Yeah, Celsius or BlockFi or Aave, they take a very small portion of it, and the rest of it goes to the individual who's providing that. And what happens is if that individual who put up that money in Ethereum and who took that loan for that down payment for that flip doesn't pay it, guess what? His Ethereum gets liquidated if he doesn't pay it because the loan to value is so low, and all of that gets liquidated. It pays any of the interest and the debts that's being done directly through smart contracts. The individual who put up that tether that I'm getting paid interest on, gets completely repaid of all my money. That individual who didn't pay, he's still going to get back any of the overage on it, and it's a win-win for everybody. The individual who's borrowing the money had the easiest, fastest transaction. So what I did to try this out is I went on and I bought a flip in Riverside, right? So I had a client of mine that came to me. I said, hey, Brian, I have a house I just need to get rid of. I want to get out of it really, really fast. Would you consider just buying it cash? I know you do flips. I said, yeah, perfect. Okay, cool. Here, I'll buy it from you and I'll offer you $385,000 cash. Let's get this done. So I went and I was like, you know what? I'm going to try this thing, BlockFi. I have a couple $1,000,000 in my BlockFi account. You know what? I'm going to try and see how this thing works. So I went on to BlockFi and I clicked I wanted a loan. And it says, okay, do you want to use your Ethereum or do you want to use your Bitcoin as collateral? I said, let's go ahead and use my Bitcoin as collateral. They said, okay, perfect. How much do you want? And I said, okay, give me $350,000. They said, okay, you got, $1.5 million in Bitcoin. Perfect. Your loan to value is really low. We'll give you an interest rate of 7% on your money. Okay, cool. So it was immediately funded in about 4 hours. Okay. I did not have to do a credit check. I didn't have to do anything. The money hit my Chase account the very next day. I then paid cash for that property, closed on that property. Basically, then what I'm going to do is I'm going ahead and going to flip that property. That property is almost done being renovated. I'm going to take that money that I get from the sale of that property. I'm going to go ahead and pay off that BlockFi loan that I did. That was, I think it was 6.75% interest rate or something like that on that loan that I had for 60 days. I did not need a hard money loan. I did not have to sell any of my cryptocurrency and incur any capital gains. I didn't have to sell any of my stock portfolio. I didn't have to pull money out of my checking or savings account. No, yeah, could I have done it? Yeah, easy. But it was funded that quickly and that fast. And so that is what is awesome, because what's amazing is you don't have to sell your crypto, right? You don't have to sell it. You can just borrow against it immediately and super quickly. So I have now seen both sides of it. I have been the lender where I have taken my money and I've deposited my stable coins on it. And now I'm earning, depending on where I'm doing it, between 6 and 9% interest. And then I've also been on the other side as a borrower, going ahead and putting up my cryptocurrency to get a loan really quickly to do a flip. And I'll tell you what, it is the most amazing, fulfilling transaction, and it's with complete ease as possible. And this is the future of where we're going. And mind you, I'm just talking about lending and borrowing. DeFi is a whole different thing. You have yield farming and being a liquidity provider and all these other things I'll get into with other times for you guys. But if you haven't checked it out, do yourself a favor. Go to BlockFi.com, go to Celsius, go to Aave, and just look into it. And what you need to get started, basically, is all you have to do is have a crypto account. You got to be able to have basically a digital wallet, about to buy some crypto, and you don't even have to move it anywhere. If you open an account with Celsius and you buy crypto through your Celsius account, you just earn the interest automatically. So make sure you guys continue to stay tuned. If you guys don't follow me on Instagram, follow me on Instagram. It's at the Brian Decker. I put out a ton of content there for you guys. And make sure to each and every week to tune in right here on AM 590, The Answer. And I'm going to continue teaching you guys on how to beat the government and earn some real money on your money. It's your money. You deserve the lion's share of the interest on it. And inflation is going to keep running rampant. We can't do anything. The U.S. cannot do anything about it. The only thing they could do is jack up interest rates, but then we can't even pay the interest on the debt that we owe, the trillions and trillions of dollars. So we're stuck. So we need to figure out how to actually make some real money with our money. So stay tuned. Coming at you guys next week, same time, same channel, right here on AM 590. And signing out, Dollars with Decker.